Well, there's a new gorilla in the room, according to my next guest. As you know, shares of regional banks slumped, led by sharp losses in First Republic Bank. And it's all part of the contagion following the collapse of SVB and Signature Bank. Well, let's get some thoughts and some charts with Shaw Hickman, research lead at Market Matters. Sean, welcome. So it was interest rates and inflation, but we've parked that, at least until tonight, because of this collapse. What are you guys making of it?
Morning, Dean. I think it's fascinating. We're seeing a situation where the market has been repricing in value for a few years since interest rates went through the roof, I should say. And now we've got a situation where markets are repricing in risk since last week's collapse or this week's collapse of SVB Bank. It's not surprising. These things happen. They happen year in, year out. We get black swan events, large or small, come from left field. When the market is pricing in very little chance of things going wrong, which is what we've had with interest rates going up so far, yet stock markets, especially the ASX, being very, very strong, there is room for a pullback. But the banks aren't too bad today, as you pointed out. 5% off in the regionals, give or take, 2 or 3 in the main stocks. What do we have in the US last night? The regionals are now down 56% in the US over the last year and a half. That's absolutely huge. So we aren't doing too badly, which makes sense because our banks are far stronger, a lot stronger, and we've actually been underweight the banks. I'll throw my hat in the ring here. We've been underweight the banks. I've said this on the show a few times over the last few months for the last month or two, and we've actually gone in and started buying today.
All right, okay, good. We'll get to the bank charts in just a moment. That's the headline there. Thank you. Why this investor is buying the banks, but I would like to bring up the chart that you brought, the first chart, the ASX 200 chart, because we've now got the S&P ASX 200 just this morning down below that 7,000 level, down by 1.8%. So where to from here? How low can we go?
Okay, again, we've said for a while we thought this market. You obviously read our report to see my comment about the gorilla in the room, which is always makes me feel good.
Of course I read your reports. Come on.
It always makes me feel good. And we have been saying for the last couple of weeks that we thought this market could easily go back into 7,000. Of course, SVB has got us here a lot faster than most people thought, including myself. But we'll take it. We've been very heavily in cash, and we feel the 7,000 is the level where you've got to start putting a bit of money to work and see what comes next. It's really not rocket science. It's risk reward. Down here at 7,000, the market's giving you some value. Pick the right stocks and sectors that you think are oversold. We've got some huge elastic bands happening at the moment. Look at the bond yields, too high, too low, etc., etc.
Mm-hmm. So we've got a US 2-year bond yield chart up on screen. So, I mean, it's been extraordinary, the moves in the bond market just since this SVB collapse, particularly through last night. So when you look at this, what signals is it telling you in terms of taking on risk?
Well, it's telling me that at 5% rates have gone too far. And again, I said that on the show to you last week. I thought that the Australian RBA wouldn't push us through 4%. Similar in the Fed, we've now gone from 5% down to 4%. I personally think both levels are too extreme. So I don't think rates will go much lower than here. I don't think we'll see the rate cuts the market was thinking they were hoping for going forward. Likewise, I don't think we'll get the rate hikes that everyone thought 2 weeks ago. I think the Fed and the RBA, they're going to have to sit back now and say, okay, how much have we suppressed the economy? What is going to come next? Is there going to be any contagion from SVB? And a lot of that will be, Nadine, around just consumer confidence. And we've already seen today that isn't great.
Mm-hmm. There's the S&P 500 Regional Banking Index monthly chart. So pretty brutal there. And then that gets us to...
But I would also, sorry to interrupt, but I would also say it's been falling for a long time. Yeah. So this month is just an extension of what's been happening. And it's an extension of what we've seen across all markets, which is we are seeing people buy quality, buying the strength. And for example, they're saying, okay, if I want to buy some banks, I'm going to buy the stronger banks. I don't want any bit risk in my portfolio. People have been de-risking for a year and a half, and that chart shows it.
Okay, so let's go to the next chart that we've brought in. This is the Regional Banking Index again. All right, let's move on from that and get to some of the Aussie banks. There you go. So if you've said that you've started to buy the banks today, is NAB one of them?
Yes, it is. So when I say started to bank, we've been, or started to buy, I should say, we've been underweight the banks. We're long NAB, NZ and Macquarie. We only hold 5% in each, which is well underneath That's in our flagship growth portfolio, I should clarify. That's well underweight the market sector, and we've started to add to them those 3 positions today. Only small, but there's more room money in the tank if we want to buy more.
Okay, Macquarie chart, let's bring that up. Why these banks over the others?
Well, let's be realistic. They're not too different at times. We don't want the regionals. We just don't need that risk in our portfolios. That trend has been entrenched for the last 18 months, as I showed before on that chart, down 56%. I don't want to catch that falling knife. Will they bounce the hardest when the market turns around? Yes, they will. Do we like the noises coming out of the Fed, out of the US? Yes, we do. We think the Fed put is back. I'm actually quite surprised how savage the markets were last night after some of the reassurances we got there. And I think in a week or two's time, this will already be old news, which is a big call. But I think it will be old news, and that's why I don't think bond yields will go much lower. You're making a note of that. You're going to quote,
Yes,
you're going to quote that, aren't you? So, I think all these banks are having a pullback. We like them. We thought Commonwealth Bank was overpriced before, and that's why we switched that to ANZ. We like NAB, and we think Macquarie's got great growth possibilities into the US. The regionals, they will bounce more, but we just don't need that in our portfolios.
Okay, so just and this is going off script, but gold, I mentioned that gold is the sector that's outperforming. Is there a time coming that you'll start to perhaps trim some of your gold positions?
Yes, we might do. I mean, obviously, if Newcrest does get taken over by Newmont, they're talking again today.
Yeah.
It's hard to see an all-scrip bid come in significantly higher than before because Newmont shares have dropped to about 12%. So they're going to have to give a lot more scrip to get the price up. But they're talking. So that's our larger holding. We've got a position in Evolution as well. We've got about 8% exposure directly to gold stocks. The answer is yes, we would, definitely. I thought we'd get more out of the gold stocks today. I was a little bit disappointed. They might be up when the market's getting hammered. But I thought Evolution might be looking at $3. It's not. So I still think people aren't convinced around here that this is not a flash in the pan. $50 last night in gold. We'll probably see a bigger move if it's up $10 tonight. People think, oh, it's not a one-off occurrence.
Yeah, all right. Evolution, to your point, $2.87, up by 2%. So this banking crisis could be old news in about a week from now.
Well, it isn't a banking crisis, a bank crisis.
A bank crisis.
1 or 2 stocks. I mean, let's look at SVB. All they didn't do, they put all their eggs in one basket. They didn't hedge that basket, and someone dropped it.